Welcome back. You're watching Startup Central with me, Nayantara, working from home. Speaking of working from home, this entire year, you've probably packed in a lifetime. And as the year draws to a close, what we have seen are the biggest IPOs in the United States overnight. Airbnb, what a blockbuster of an IPO. Founder Brian Chesky's personal wealth, in fact, soaring to $11 billion. In the midst of a television interview in the US, when he was seeing the share price surge, he was literally speechless. It was really quite a sight. I'm going to be discussing Airbnb and the second IPO, Doordash, disrupted delivery business forever, with my next two guests, Ray Wang, Principal Analyst and Founder at Constellation Research, as well as Mark Shmulik, the Lead Internet Analyst at Bernstein. Thanks, guys, for joining us on this Friday's edition and being a part of the live broadcast here in India. You know, we've also been watching these blockbuster IPOs. Heck, we've been tracking Airbnb and Doordash since they were in their early days, right? Ray, let me come to you first. You know, the fact is, we're still in the midst of a pandemic. We don't know what the future is going to be, whether, you know, a COVID passport is indeed going to be a reality. People are still afraid to go to hotels. I'm sure Airbnb hosts are still afraid to have all kind of guests from all over the world stay on their properties and all of that. But look what's going on Wall Street and that IPO. What did you make of it?
Well, we have to look at it this way. I mean, these were pre-pandemic winners. They were pandemic survivors, and they're going to be post-pandemic breakouts. And that's the important thing here. Airbnb, if you think about the business model behind it, they actually got it tightened up, and they realized how to actually figure out the targeting of what they needed to do to take advantage of the exodus from cities to rural areas to be able to survive in that market. But when travel stocks go up and when the vaccine is deployed and when we feel safer, it's going to be on a tear. And that's really what the valuation, the growth is baked in there. Doordash is a little bit different. Doordash, you have to understand, is the last mile for delivery. It's courier. So what we see in food today, it could be medical supplies, it could be pharmaceutical labs, it could be stores. You already see that with the relationship with Macy's and other areas. So if you want to compete against Amazon and you want to deliver on the last mile, Doordash is going to be that opportunity. So they're very different, but they're also very similar in terms of their types of business models. But you have to think about it. What happens post-pandemic and what the growth prospects are going to look like.
Okay, so let's pose that question to Mark. Mark, what are your thoughts on this? Ray's pretty clear. Pre-COVID winner, breakouts we're going to see in the post-COVID world. What are your thoughts on this?
Yeah, you know, I think when I first saw how it priced yesterday, I had a similar reaction to Brian Chesky. I think I said, wow. You know, and so certainly there was a lot of optimism on Wall Street, even going into it. And the reason I think for that is, you know, investors were looking for a way to play the reopen, but they wanted to do so with a internet company that also gives them the optionality of what can the platform become. And Airbnb is frankly really the only way to do that. You know, there's certainly other, you know, internet names that work well on a reopen. You could point to Lyft, but we know what Lyft is already at this point. You know, you could point to the online travel agencies, but again, we kind of know what they are. With Airbnb, there's this promise of something more in addition to that recovery curve. And I think we've seen that play out right now, in particular, as their entire business model pivoted on the back of COVID. And I think that just shows the art of the possible here. You know, about a quarter of their bookings right now are coming from these long-term stays. That's incremental to what they were doing previously. And so there's this belief that eventually we reopen and we go back to traveling the same way that we were. But potentially there's now this entirely new revenue pool of work from anywhere. And so folks are going to take the opportunity to spend an extra 30 days a year, you know, living in a home, perhaps somewhere outside of the big urban markets. They're talking about experiences as incremental growth opportunities. And so certainly you're seeing the optimism baked in to around a company now is not only coming back to where it was pre-COVID, you know, once we reopen, but there's all this incremental optionality that we're just starting to unlock.
Yeah, and I wanted to add something to that, which is really interesting, is the regulatory framework where other large internet companies are under attack is less so here because of the short-term rentals provide transit occupancy taxes. So the cities are actually embracing what Airbnb is doing because of the tax and the tax revenue that they also provide. So they no longer see it as a threat, whereas Lyft and Uber continue to fight that fight, and other internet companies are in a different kind of situation of regulation because they don't have that taxation component.
Okay, that's a fantastic point that you're bringing out, and I guess the investors have also factored that in. And speaking of factoring in, Mark, I'm going to ask you this one question. You see the IPO share price double from the launch price in the case of Airbnb. If you look at Doordash, you saw the price surge by 86%, right? I've got to ask this question, and are people on Wall Street asking this question, that were Airbnb and Doordash therefore being conservative on the share price? Clearly, they didn't anticipate this kind of a demand. You did see them upping the price earlier this week, but they could have obviously had a better pricing for the IPO.
You know, this is always, I think it's an art, not a science. And I think we're learning that quite quickly. You know, there's certainly been a lot of debate on Wall Street about how do you even go to market? Do you direct list? Do you go through a spec? Was all the rage these past 6 months? Or do you go more the traditional route? You know, and certainly if you think about it from just a pure fundamental basis, you know, it's hard to get to the levels of you know, where we see these both of these names frankly trading. You know, for an example, DoorDash right now, it's a food delivery business, and they're certainly shown, you know, the execution chops, right? I think they're about 50% market share in the United States and the fastest growing, you know, growing over 200%. And so they're certainly getting credit for that. But from a revenue multiple perspective, it's trading at 3 times what if you were to isolate Uber Eats to be trading at. You know, so they're certainly getting even more than simply just being the best player in a market. And so I think what we're seeing is just this pent-up investor demand to try to go into these names. And certainly, you know, you could circle DoorDash as the pandemic winner. You know, there's a belief that this market has permanently inflected. Even as we go back to a reopen, we're still going to start ordering and continue ordering food delivery. You know, and I think there's just a lot of incremental confidence in that management team. What Tony has done, you know, I think is remarkable, and we've certainly seen that play itself out with investor sentiment and interest in participating in both of these, you know, very hot IPOs.
In fact, you know, look at the way the NASDAQ has performed, the tech companies have performed in the entire year. So Ray, if I could come to you now, what's going to be the rub-off effect of these blockbuster IPOs? What do you think it's going to mean for the Me Too models that have mushroomed all over the world, including in India? It's not as if our internet company founders have not looked up to DoorDash or looked up to Airbnb, you know, reworked the business model, and they have their Indian version for it. Do you think there's going to be a rub-off effect in sentiment and even in allocations?
Yeah, I think definitely it will be. I mean, this year was particularly interesting, right? I mean, just this week, 10 companies raised over $8 billion this week. And we've had over about 400 IPOs in on this year for $145 billion versus 200 last year at about, I think it was like 59 billion, right, in terms of IPOs that were raised. That's a crazy stat. And so a Swiggy plus a ghost kitchen, right, when you put those together, there's some interesting effects that are going to occur, right? And this is the era of what we call digital giants. These digital giants are popping up. We're talking large millions of active users. We're talking about network effects and data-driven digital network models. We're talking about the ability to actually pivot on the fly in terms of understanding customer behavior and sentiment. And so companies that are built in these types of models are going to succeed tremendously because of what's happening in terms of their ability to get reach. And so at this phase where they're buying growth, they're buying market share, they're fine-tuning their models, they're basically gaining ground on the existing market share. And what they're doing, a couple of things, is they're taking existing categories, collapsing them, and raising their overall total addressable market. That's what makes this category so exciting. And it's not just this, right? We see one specific use case being proven out, and it's the multiple use cases, you know, as Mark was saying earlier as well, right? I mean, this is food now. This could be other things later, right? If you see what's happening with Airbnb, from short-term rentals to long-term stays to other things, there's so many possibilities that are occurring in these models, from just, you know, sharing economy out to gig workers, and you're going to see combinations of these effects in different types of digital monetization models.
And Mark, if I can ask you the same question I'd asked Ray, and you know, you've heard what he has had to say. And going forward, from Airbnb as well as DoorDash, the proceeds from the IPO, do you expect them to flex their muscles, look for opportunities outside of the home country as well?
Yeah, it's certainly an interesting question what they do with the cash raised. I think certainly I would imagine at least a portion of that's going to get tucked away for a rainy day, because we've certainly seen, what happens in the unknown, and Airbnb's had a very tough year. They went through a big round of layoffs at the start of that pandemic until, they unlocked this entirely new business, an incremental business to them, which is long-term rentals. Like, no one saw that use case coming, but once they saw it, they pivoted to it. So you'll certainly see that, I won't say certainly, but you'll likely see some of these dollars put aside for a rainy day just in case. But I think the message that they've positioned and posited to investors has been all about, DoorDash is the on-demand delivery platform, and we've started to see them already get into grocery delivery through kind of their white label service for Walmart. I look at convenience, and there's another company here called GoPuff, which certainly kind of has thrived in this kind of convenience, shorter window delivery. DoorDash has their Dash Mart. I fully expect that they'll be putting, incremental investment to grow that business. But I think that's how they're thinking about it is we have, 5 million Dash Pass customers. How do we get them to open up DoorDash whenever they need anything and they need it now? As Ray was saying about this kind of logistical platform and this on-demand delivery platform, how do they ensure that when you think about anything, be it a t-shirt from The Gap, you open up DoorDash and you'll get it delivered on demand? And so I think they're going to expand those use cases. And my best guess at this point would be that's likely where the focus is going to be more so than geographic expansion. Airbnb, on the other hand, is already in 100,000, different cities or municipalities. So they're certainly already everywhere. And I would imagine they're going to be pursuing more of the same, which is, we've unlocked our current kind of rentals or private rentals business. Where do we grow from here? We obviously want to keep expanding that, but they've mentioned experiences a lot as something that they want to build out incrementally. It wouldn't surprise me. They had an acquisition previously called Hotels Tonight. They could be doing more to kind of get into the hotel space potentially, but I think they're going to go back to exploring how do you actually get some of those incremental lifetime value from each of your users by expanding the use cases of your platforms.
Mark, labor is, of course, cheaper in India. So logistical problems that you talked about, that how are you going to make it on demand where you can pick up a t-shirt from The Gap and get it delivered? We have two companies in India. One is Swiggy, that Ray was talking about, and the second is Dunzo, which was incubated by Google, and they do just this. You can get a t-shirt from any store, you can deliver a courier, you can get a mobile charger. You just can't get alcohol and cigarettes delivered for legal reasons, but these are two very interesting companies. And Ray, the question then is that with what we've seen with Airbnb and DoorDash, do you think we're going to see a re-rating of these two sectors around the world? Because there's always a herd mentality too, right?
Oh, definitely. In India, Zomato, Uber Eats, I think Ola Food Panda, Domino's. Right? Actually, Domino's is the interesting one to me. Like, if Domino's would start delivering other things, they have the complete infrastructure in place to do it. And it's one of the things I actually have in my next book we're writing about. It's like they could take out this market. It's a market that's collapsing against them. So we actually see, we're going to see re-ratings here. We're going to see re-ratings with Gojek in Indonesia. You're going to see that across the world because, people are rethinking what does this mean? It's more than food delivery, and we've got a model that's proven. And now the herd comes back in and says, "Okay, yeah, everyone's repitching their decks right now. I'm sure, and they're basically pitching the streets. No, we're just like this plus, which is I think the conversation that's going on at the moment." So.
Okay, I'm going to thank both of you for joining us on this live broadcast in India to talk about Airbnb and DoorDash blockbuster IPOs. I think it's got everyone excited around the world. You don't see events like this, and we are, of course, in the times of Corona, so in the middle of the pandemic. Look at the kind of valuations you're getting, prices being upped, and I think Brian Chesky's facial expressions just summed it all for us yesterday. Then he went on to say, heck, when I raised debt, I thought the share price was going to be $30, but then we all saw what happened, didn't it? Thank you, Ray. Thank you, Mark, for joining us. And I know it's really early morning for you guys, so we really, really appreciate it.
Take care, everybody.
Thank you for having us.
All right, ladies and gentlemen, we're going to take a short commercial break, but stay tuned. We've got a lot more lined up for you on the other side. We'll get you an exclusive conversation with Licious as well as Happiest Minds.